Hey everyone. Today we're here with Kelly Scavanner with Prime Lending here in Cincinnati, Ohio. She has been in the business, she wasn't sure if she wanted me to say this, but for 36 years. And of course, she started when she was 12. So
Exactly.
And today we're going to talk about the fun topic of interest rates. And one of the reasons I wanted to bring Kelly on is definitely for her experience and the fact that she's seen a lot of deals, and she knows what's going on with them, the ins and outs, how to help us realtors structure deals properly and get it to the closing table. So welcome, Kelly.
Yeah, hey, thanks, Aubrey. Thank you so much for having me today.
You're welcome.
I'm working with you, and I think it is really important that your clients are working with experienced people that do have a lot of knowledge around how to structure a transaction. It's very important.
Yeah. So let's dive right in. Interest rates. So we know that at the end of 2022, they kind of spiked up, but now I think everything's kind of calming down. Maybe not everything, but they're back down from what they were a little bit. Is that correct?
Absolutely. Yeah, we have seen a little reprieve. I mean, we're still hovering right around that 6%, low sixes for a 30-year fixed rate, which is still a very, very desirable rate. But we saw such super low rates for many years. So people really got kind of accustomed to that 3% mark, and we're definitely not there right now.
Okay. All right. Do you think we'll get back down to those? I know that's hard to say, but it kind of goes on to our question of like what goes into an interest rate, what things go into it to make them that low and different things.
Yeah. And not likely that we'll see those rates ever again. Honestly, no one knows. No one has a crystal ball. There are many leading economists that think that rates will come back maybe to the low fives at some point this year, but that's just yet to be seen. And as far as, what goes into an interest rates are determined by mortgage-backed securities. So that investment is what determines what interest rates are. That and then a lender's margin, right? So every lender is pricing based on mortgage-backed securities, but then they've got to add in what their margin is, so what their profit margin is, and what they need to be able to make from an income standpoint on a loan by loan basis. So that's a kind of a general overview.
So, and I don't know how we want to get into this, but whenever the media talks about, the Federal Reserve interest rates, and we hear about that, does that play a role into the mortgage interest rates? Yeah,
so the Federal Reserve rate is the rate that banks use to lend each other money. It's the overnight banking rate. So, yes and no. I mean, okay. The mortgage rates, again, the mortgage-backed securities have that kind of baked into the rate already. They already anticipate what the Federal Reserve is going to do. So there's a correlation, but it's not a tight correlation. The most tight correlation is that mortgage-backed security price every day.
Okay. All right. Well, yeah. I know it's all about interest rates today, so I have some notes here. So what factors impact the interest rates? Like say somebody's applying for a loan, like what factors determine what rate they get?
Yes. So there are many factors. It used to be that, everyone got the same rate. But it doesn't work that way anymore. It's risk driven. Interest rates are completely risk driven. So, many variables, one being the type of loan that they're looking at. Are they looking at a conventional loan? Are they looking at a jumbo loan? Are they looking at an FHA, VA? All of those different program types carry their own different interest rates. In addition to that, credit score plays largely into what interest rate is going to be available for any given client. Also, the loan to value, how much down payment are they going to have? Are they a first-time home buyer? There are some incentives for first-time home buyers out there, so that's going to factor in. The occupancy type, is it an owner-occupied property? Is it going to be used as investment property or as a second home? Those all have different interest rates that go along with them. Also, the debt to income ratio. If they have a high, what we call a DTI, then that's gonna have a little bit of a negative impact on their rate. A purchase loan versus a refinance loan. So if you've got, in our case, if we're doing a refinance for a client, that's going to be a little different interest rate than what a purchase client would get.
Okay. So what would be, I know a lot of times you probably get the calls and I get the calls, what are interest rates right now?
Right.
So it's really best because it's case by case scenario, right? So the best thing would be to give you or lender a call to figure out each individual scenario. Is that correct?
Absolutely. It's not as easy as just being able to quote an interest rate. We can give a range. The other thing that differs is if they're doing a 15-year term versus a 30-year term. So there are a lot of questions that the lender should be asking the client about their particular scenario in order to determine the rate.
Okay. All right. Yeah. Great. Yeah. So in this one, I've heard of this before and I've never been in this scenario. So the next topic is float down your rate.
Yeah.
Let's talk about that one. What's that mean?
Yeah, so that's a pretty unique feature to prime lending.
Okay.
So essentially what we allow a client to do is once they've purchased a home, then they have the ability to lock in their interest rate at that point. During the loan process, once they're 20 days away from closing, if the interest rates improve, we give them the ability to float down the rate to the lower rate. So it's a win-win. They're locked. If the market goes the other way, they're protected and their interest rate is locked in. But if rates do happen to improve, if the market improves a little bit during that loan process, then we give them the ability to float their rate down. So it's a really excellent feature. And again, it's unique to prime lending, and the client doesn't have to keep an eye on the rates. We do that for them. And so sometimes it's just a nice surprise for them, or we can say, hey, guess what? I just lowered your rate by a quarter.
Okay.
It's a great feature.
That is a nice feature.
Yes.
I'm sure that's a nice surprise too.
Absolutely. I just had one a couple weeks ago where I was able to do that. It was for an investor. So it was really nice. Yeah. We want to talk about ARMs really it's just, there are unique situations where an ARM loan makes sense for buyers.
Okay.
If they know they're going to be in the home for a short term, 3 to 5 years, then an ARM might be something they want to explore. And usually what we're going to do is I'm going to provide a comparison for them so that they can see, the difference, and is it really going to be beneficial in their situation to go with an adjustable rate mortgage. The spreads between fixed rates, because there's kind of an anomaly in the market currently and over the last year, the spreads really just haven't been there. So in other words, the ARM interest rates aren't deeply discounted. They're discounted, but the spreads just aren't really quite there to make it make sense for everyone. But certainly there are situations where it does make sense for a client to consider an adjustable rate mortgage. The other thing too is if they happen to be buying in an area that is appreciating at a really great rate, then they know that their equity is going to be built in the form of appreciation more so than it's going to be built in the form of them making all these great payments toward their principal balance. So that's another situation where in certain markets it makes a lot more sense to go with an ARM product.
Okay, and that's a great topic that you bring up, is in certain markets. So even you hear like national standards or national what's going on in the market in the bigger global picture, but then even with here in Cincinnati, like I live in Hamilton, that's a different market than say Hyde Park or downtown Cincinnati or even condo versus house. So yeah, there are different markets. So you never can just take a standardized answer for it all.
Exactly. There's no one size fits all situation. Every buyer's situation is unique, and their financial goals are also unique, which is a discussion that I'm having with my clients right up front. What are your financial goals? we want to be sure that we're not just throwing, a loan at them and saying, here's what you get. We want to be sure that we're helping them accomplish their financial goals.
Okay. All right.
Yeah.
And then I believe we have 2 more topics here.
Yeah.
So we have jumbo loans. Can you tell us more about that? And I believe that there's like a change in what you're allowed to go up to jumbo.
Yeah, so anything under jumbo is considered a conforming loan amount. So as long as you're not looking to borrow more than $726,200 for most parts of the country, then you're going to be in those conforming in that conforming window. Anytime you're looking to borrow more than that, now you're in that jumbo loan market, and that's just a different program. Interest rates are going to be a little bit different for those programs. The down payment requirements may be a little different. The credit score requirements may be a little different. But yeah, that limit it's actually pretty high, right? 726,200, particularly here in Cincinnati. But yeah, that's what that means. If people hear about jumbo loans, that's what that means.
Okay. All right. And then finally, so for the last thing that we wanted to talk about today is how important is it to use a local lender?
Wow, that's a great one. It's very important. And at Prime, we like to say that we're a national lender with local expertise. So I can lend in any state in the country, but obviously I'm based here in Cincinnati, and it's really, really important. There are call centers, a lot of lenders. Online lenders simply have call centers. They've just got people answering, phones all day, and they may have just gotten into the business, last week, quite honestly. So there's a lot of sometimes inexperience that goes along with that type of lender. And unfortunately, there's still, some bait and switching out there. I honestly just looked at a loan estimate last Friday from an online lender who shall remain nameless, who was giving a quote to my client, and he thought that he was getting a conventional quote, and it was for an FHA loan. So the interest rate was a lot different. And so it's just so important that if people are going to use an online lender, ask them to provide a written quote and then get an apples to apples comparison from a local lender. I'm going to be completely transparent and honest with someone. If they're getting a great deal, I'm going to let them know that's a great deal. You should go for it. But I'm also conversely, and that doesn't happen very often. But conversely, I'm going to say, look, you've got to be sure that you're comparing your total out-of-pocket costs. You've got to be sure that there aren't any hidden fees, and that they haven't forgotten to include anything on the loan estimate. That's critical. There are escrows. That was another thing. This particular estimate had the property taxes at half the rate that they actually were. The property taxes were over $500 for this particular property, and the estimate showed them at $250 a month. Okay. So lots of little things that they'll sneak in there sometimes that are not accurate and are misleading, and are doing a real disservice to clients. So it is super important to deal with a local lender.
Okay. I have one more question. It's one that I'm kind of throwing out there. Can you tell us what the difference is between like a pre-qualification and a pre-approval?
Oh gosh, yeah, that's a great question. A pre-qualification is basically someone asking a borrower, how much money do you make? How much money do you have in the bank? How much do you want to put down? They're just asking those questions verbally, and they're just going through a process or an exercise of seeing if they qualify based on the information that that the client is providing them verbally. Okay. A pre-approval takes it to the next level, where we're actually pulling a credit report, because as we talked about earlier, that's a critical piece in knowing whether or not the borrower qualifies, at what interest rate, how much debt do they have. We're verifying that information. We're also typically running the loan through automated underwriting. So it's vetted. A pre-approval is vetted, and you can pretty much rely on it as being, hopefully the lender has done their due diligence, and you can rely on it being pretty credible. Another thing that we do at Prime Lending is we take it a step further than that even, and we have our Buyer's Edge program where we will collect documentation from the borrower as if they were already under contract and send their loan through underwriting. So an underwriter reviews it, and we actually issue a loan approval before they have even purchased a home. It's a great negotiating tool.
Yeah.
It lends a lot of credibility to them as the buyer, particularly if they find themselves in a multiple offer situation. If they're up against 4 other buyers who are just pre-approved, but they have a loan approval, that's going to pull their offer to the top of the pile. I'm also going to be calling the listing agent and letting them know, hey, this borrower, making sure they understand this borrower has actually been through underwriting. It's not just a pre-approval. And that also means that we can close in a much shorter time frame if that's in the best interest of all the parties.
Okay.
Yeah.
This has been a ton of great information, and I thank you for your time and look forward to this selling season.
Yeah, absolutely. Come on, spring. It's already getting busy out there. So
I know it is.
Yeah.
So,
thanks for having me.
You're welcome. Thanks for being on here. If anybody needs to get in contact with you or get pre-qualified, pre-approved, how can they get a hold of you?
So I have a webpage. They can just Google Kelly Scovanner at Prime Lending. I know are really good at sharing my contact information with your clients. At which point usually I'm going to call them, have a phone conversation with them, provide the link to my portal where they can apply online. Be sure that they've got all the information and answers to the questions that are really important to them, at least in those initial phases. So yeah, and my phone number is 513-884-6618.
All right. Thank you so much, Kelly.
Thank you. Have a good one.
You too.